Hello everyone, welcome to my YouTube channel, and today we will be touching on something very important, and that would be CRT and the market maker model, or CRT as the market maker model. Right, so today's teaching or meeting will be touching on how that CRT, the concept of CRT is based on or was taken from ICT's market maker model, and how they both align to a true concept, which is the power of three, trading the power of three. So we know for sure how that when we are trying to trade CRT, just like this right here that we have, like this single one we have here, when we're trading to trade candles like this, what we are trying to do in essence is we're trading the accumulation, manipulation, and distribution, right? Where this single candle becomes an accumulation, right? A range would be formed on the 5 minutes for this bulky candle or lower, right? And once we get a purge above this candle high, we have gotten the manipulation of this range, right, of this candle, and we have the distribution. So this is the idea that when we trade CRT, we are trading the power of three. But not only that, we also, once you start viewing CRT as the market maker model, once you start having that view, you would know what to do and when to do what to do, right? Because everything, they're all together, you understand? So before we jump right into it, I want to touch on something which we did in the last YouTube video we dropped, and that's candles being ranges, right? CRT candles being ranges. So here, from here to here, we can see how we have this range low right here to this range high right here, and we need to probe from the last video we put out. We need to probe this range first of all to know if it makes sense on the higher time frame, right? So here it says 16 hours, right? So we need to go straight to the 16 hours to see if that is a single range, and this happens to be 16 hours, although this is showing us a true CRT that has been purged and price came back down into it, but this is showing us now 32 hours, so we can't jump down to the 32 hours, so we'll be using the daily 1 day to just confirm that CRT. And on the 1 day we have this bulky candle right here as one single CRT, and what would give us more confidence or confirmation that this CRT is a perfect one, what confirms our range? A key level confirms the range, right? So the presence of this rejection block, like so, resting around the CRT range, confirms that there would be a potential manipulation once price gets into this area. We could expect that this accumulation range would see a manipulation to it, and there would be a distribution. Now let's get back to our 4-hour range, and this range, just like so, just as we have here, this is our key level. We don't really need this as much, even as much as you think you might need to draw your key level every time. Once you have the range right, you really don't need to map out a key level, honestly. So we have this range low here and we have this range high. Now there have been some videos where you'd hear Romeo states that he wants to see a thick bulky candle stab into an old low or above an old high, and that bulky candle would be your what? Your model one, right? Your order block that would be formed for a change in state of delivery, right? Now, this thick bulky candle, right, confirms that yes, we would be getting a sort of distribution. Once price closes above, there would be a change in state of delivery once price closes above that, right? So we would not trade until the candle closes. So we want to only trade after the candle. We want to see a range form on a lower time frame at the low of this range. We want to, at the low of this higher time frame range, we want to see a lower time frame range form, which would also confirm something with time. But before we get there, right, you see how we have this low right here and we have this high right here. This low becomes our what? Sell side liquidity, right? Sell side liquidity. And you have heard ICT states that once price starts buying or after price grabs a point of liquidity, the next thing price is going to do is going to attack buy side or rebalance and imbalance. So the two reasons why price gyrates or why price goes from one point to another is to attack liquidity. So this one was in form of buy side liquidity, or to rebalance some sort of imbalance or inefficiency, right? So we have our sell side liquidity here, right? The first idea or the first the first part of the market maker model, right? I don't know if I'll be able to draw, but let me see. So the market maker model is just, sorry to cut it short, but just something like so, right? Where we have this, for people who might not remember what it feels like. So we have something like this where we have a sell side liquidity. This is for a bullish pattern, right? And we have a true market structure shift. This can be called a sell side liquidity or a false break of structure, a false market structure shift, right? To trick the less astute into going to sell. Then we have a true market structure shift, and we have a fair value gap. So this is what the market maker buy model looks like. So when you have a CRT, a bullish CRT just like this, you are trying to read the CRT using the lens of the market maker model. That is what gives, I don't know if you've heard Romeo said that CRT is what gives you more confidence, right, for picking your original consolidation, right? You use your CRT to have more confidence, right, as a confidence for picking your original consolidation. Well, that's not what we are dealing with right now. So here we have sell side liquidity, and we now have to understand, we need to understand that for us to be buying, right, for us to be buying, we need to see something very important. We need to see price go below our model one, right, and close above. We need to see a change in state of delivery, really. That's what I'm trying to say, right? So here on this time frame, we could just use it like this, even without using time. But I'm going to show you on a lower time frame how to add time to it without using time. If you were just trading the pattern blindly, it would have been, we have taken sell side out, then price gave us our market structure shift with a break above this range, right? And we now have an inversion fair value gap right here, although we didn't have any fair value here, but we have this inversion and we have this other block right here, right? So you see from here, price moves to the upside. So Here you have your market structure shift, and here you have your bullish order block, right? So this is how your CRT happens to be the market maker model, right? But this is not the whole gist to it, right? So after the model 1 forms, after the thick bulky candle forms, you are going down lower to try to find a range. You know that, okay, you want to see the next candle purge the model 1 candle and give an entry. All right, so what you need to do, just go down. You want to trade, you also want to see the same, because it's logical. You want to see the same logic happen on a lower time frame, right? CRT as what? Market maker model, right? CRT as market maker model. So right here, 2000, right here, we have that new 4-hour candle open up, right? And here was the pre-manipulation liquidity, or the sell side liquidity, right? Which happens to also be a range, which created a range, this range high, buy side liquidity, or this one. Let's see if we can count that also to form a 4-hour. So this just formed a 45. Let's see from here, 45 minutes. And from here, from the fullness of this range right here, we had a 2-hour range. So let's drop down to the 45 minutes and check if we have one single CRT here. So this is buy side liquidity, 45 minutes, 3 bars of 15 minutes. So you can see how this makes sense. So this is showing 2 45-minute candle, so that would be 90 minutes. So let's see if we have a solid CRT on the 90 minutes. I don't want this video to be too long. So you can see how we have a solid CRT candle right here on the 90 minutes. So this is ticking our boxes that, of course, this is making sense, and this trade looks like something that's going to hold. So you don't need to second guess. You just go to your 15 minutes. Once you can see that purge, once that purge starts happening right there, where is my candle? All right, so once that purge start happening right there, all you have to look at is view from the lens of time and liquidity, time and price. So here we have the opening of this hour, so I'll just call it the hourly open, right? So the open of this hour, price manipulated. Let's see if we can go down to the 5 minutes. I'm looking for a thick bulky candle that stabs into an old low, and if we don't get that, we will just trade after it happens. So right here on the 1 minute or lower, there should be something here. Right here we have this hourly open. Right here there is a way to trade the turtle soup from here, but I won't be touching on that right now. Maybe in subsequent videos would be uploading. So right here, the same concept, we have taken out a range, sell side liquidity, range low, right? And we have now created a market structure shift here. We broke this range that came into this area here. We created a market structure shift, and this could be where you start looking for longs once price comes, because here would be forming a true what will I call it now, a true order block on a higher time frame. So let me just quickly check if I can see that single bulky candle that stabs into this low on the 1 minute. So here we have we have the 1 minute right here, and we didn't get that tick. There was no bulky candle right here that stabbed into a low right here, but we can see after price opened, price tapped into a sell side liquidity area, right? Then on the 1 minute, price gave us that market structure shift right here, and we have this fair value doubled right there. Your entry could be from here, right here, stop loss right here, and you can target that high, the higher time frame range, using the lower time frame ranges risk. So right there, just like so, is how you trade the CRT in form of market maker model. So that's how you go about it right there. So on the 15 minutes also, there could have been an entry after price took out this range low, gave this breaker block right here, entry right here. Your stop loss could be, your entry could be here at the breaker block, or even the fair value right there, and your stop loss would be at the same joint, and your target right there. And due to we know already that hits the target, you understand. So that will be all for now. Thank you for sitting to the end of the video, and I catch you on the next one.